Hello, this is Dave, and welcome to Equities Story. I'm with the amazing Wolf. And Wolfie, you've been doing really well all week on your own. Hasn't he done well?
He has, and I've been getting really nice emails and saying we don't need the Hound anymore.
Yeah, no, I've been getting other emails. I won't say what they say, but some people have found these videos really hard to watch because you haven't been abused in any of them in the last 3 or 4 days. And you know what? You gave me a shock on the weekend, I have to say, because you had a sort of shirt on.
I know. See, sometimes I surprise you, and I like to surprise you sometimes, just to keep you honest, pretty much. So yeah, that's okay. But it was a great weekend, wasn't it?
No, it was a really good weekend, and plenty of wisdom was shown. There was plenty of alcohol as well, which was all good, and that's one part of being a trader, isn't it? Being able to
exactly.
Drink hard and work hard.
Yeah, keep your shirt on.
Anyway, this is just general share advice. It's not personal advice. And let's go again. Now, Mr. Wolf.
Yes.
We've been talking for too long this morning about the change in sentiment, and the general feeling around the world is, that maybe there could be a recession. Commodities are starting to cool off a little bit because obviously the demand might not be there. I was explaining to you earlier that I've got this really great benchmark on the Chinese economy, which is my soccer team, the Wolverhampton Wanderers, who are owned by one of the most biggest companies in China. That they're worth about 142 billion on the Chinese stock market, but they've got 33 million in debt. And guess what? They haven't bought one player this year. There's all this talk we're going to buy this guy for. Well, they've got, I think they're having to tighten the belt a little bit, right? So this Chinese slowdown is not very good for Wolves. It's a little bit of a worry for me, Wolf.
I think you should get ready for the championship for the following season. That's pretty much what I can see it. Oh. Look, honestly, I mean, let's talk stocks, because this is very, very interesting what you're talking about China. Mm-hmm. Reading this morning's, articles and so on, and just getting the feel with this, for me, silly and ridiculous lockdowns that they have every time there's a little bit of an outbreak of COVID. This does not help them in any way, shape, or form. In fact, it's detrimental to their growth. So I know that Xi have set his target on 5.5%. I think growth. I don't think he's going to get it. If he keeps doing these lockdowns, forget about it. And I think we're going to probably see some sort of problem with China growth-wise. So is that going to spread it across the world? Possibly. It's not going to add any help to our problems with recessions, is it?
Well, I think whatever his name is, it's actually about XI, which makes it a bit complicated. XI or whatever. I think he gets what results he tells them to give him.
Yeah, well, they do, like the massage numbers, yes.
Yeah, so like the Americans, so like everywhere in the world, but at least I think they do it a little bit more successfully, maybe.
Professionally.
Professionally, yeah. Because I think if he says it's going to be 5 or 5.1, it will be 5 or 5.1.
Exactly. It doesn't matter if it's -5, it will be 5 by the time you're going to get that paper out in front of you.
So that gets me back to my soccer team, which I think is the only true benchmark, and we can find out what's happening in China, and make no players at all. So I think the Chinese have got a problem, and yeah, we could start seeing a bit of a slowdown.
Yeah. Now look, that is a problem for me with the Chinese economy. So we'll see how that plans out. But the sentiment's weighing, not just the recession globally, but I think China as well. Commodities are getting sold off, and that's the change of wind that we've seen. And I've been talking about this all week, right? Every day. That's let's focus on something else. And we've been focusing on the stuff that's been sold off over the last 3-4 months, maybe 6 months even. The tech stocks that really been thrown out and priced for failure. And they've been really looking pretty interesting, haven't they?
Right. So generally, what we're saying here today, and we're going to make it really sort of clear to you, the stocks like obviously the Whitehaven coals, we still like coal. It doesn't look bad, but it just might struggle. You can see CRN, which is a little bit more affected by the royalties, obviously in Queensland. Like I said, as soon as it went above the water level, you've got to get out. And it just, surprisingly, this one hasn't recovered even so, even though it's a good dividend payer, Wolfie, it's not recovering at all. And
Look,
again,
Dave, I've got another question for you, right? With the coal, because how accurate are these pricings and everything else? Because what I've been reading is that China really hasn't been buying any coal from Australia. They've been buying coal from Russia, and they've been probably paying a very cheap price for that. So I'm starting to think that maybe there's a underlying issue with coal that we won't probably find out until another month or two away. So I'm very wary of it.
Yeah, but they're still buying some coal from us, Wolf. I mean, it's not like
none.
What? No coal. What? No coal at all.
Yes, they've been boycotting coal. They've been getting coal from other places.
Right. Okay. So, all those coal ships I saw in Newcastle leaving, most probably going to other countries in the world, like
India, probably
India,
America,
Japan.
Yeah, that's right. It's so.
Well, play by the charts. That's all you can do.
Yeah.
Right. If it breaks those trend lines, you just got to get out. The charts will tell you, and they'll break those trend lines maybe before we get the news, Wolf. But certainly your LYCs of the world, all these sort of stories. Look, you've got to sell it. It's broken trend, right? I know we like the story, but we have to be really tough with these type of businesses.
Yes. When the sentiment turns, Dave, that it's, we've seen it with tech stocks, right? When it turns, it could be savage, and you could see LYCs come back to $7, $6, $5, right? So we want to play it, especially when we're trending this on a long-term basis. We still want to protect some of our money here and come back to it at another time.
Yeah, 100%. And you're having this little cool off now with oil as well.
Yep.
So even Woodside is still trending. I think I'll just move out for the moment. Now, what the charts have said is that we're going to get this cool off in oil over the next few months, right? And then oil's going to have a run a lot higher. So maybe just get out for the moment, and when it starts having that big run, we'll get back in. So Wolf, so we've got this slowdown now with the commodity plays, right? The commodity trends, or the short-term trends in commodities, maybe medium term, is over. But what has happened? We've had this massive sell-off on tech stocks.
Yep.
And you know what? We've often thought it's a little bit funny. Inflation going crazy around the world. You'd think the tech stocks would be quite a good place. I mean, they're just like Equity Story. It's just a few idiots in a computer, right?
Exactly.
Right.
In a nutshell, that's exactly what we are.
Yeah.
A couple of clowns talking stocks.
Right. Okay. So, inflation for businesses like ours really shouldn't make too much of a difference, right? And so I want to go through some of these sort of tech stocks. Now, they're not all tech stocks, but we're going to do a charting exercise. Now, this isn't the Cincinnati method, but it is sort of. And what I explained to you, what we're looking for is to see if we can make some trades. And we're going to do it the Cincinnati method. The one thing that is lacking with these trades is our weekly chart, which is our most important, is obviously still weak, right? But we're going to have a look at some stories on daily charts, and we're going to see if they're worth having a look at. So what we're looking at is our favorite stories, right? Things like PTG, right? And we're going to look at them on two charts, Wolf. So PTG, we like it, right? So what we're going to do, and I'm going to go slowly because we're going to teach people. We like the story, but normally for us, this is a total wipeout. We're not going anywhere near it. But we're going to have a look at the daily chart. And you can see the daily chart's still weak as well. So again, we're just not going to go near that one either at the moment. But it's on our watch list. And if it can get back over 30 and start swinging, we could have a look at it. Yeah.
Yep.
Now we're going to have a look at CDA, which we're looking on the weekly and maybe thinking there's maybe an opportunity to get some. So what we're going to do with CDA is have a look at CDA on a daily chart and see if it gets interesting. And to be honest with you, it's not looking too bad at all, Wolf, because what you're seeing is the stock has come up, it's had a swing, and it's starting to swing up again. Now, we might get a little bit of resistance on that old trend line around 762. But generally speaking, I think if these stocks start recovering, we could see something like CDA at least have a run and go back up and retest $8. So I'm quite liking it. Yeah.
Yep. I mean, look, just to give you my side of things, this obviously the stock stories you're looking at are very good fundamentally, right? We're obviously trying to pick stuff that positive cash flow or profitable. I mean, in the case of CDA, they're going to have record profits this year, which is astounding that they are sold off so much.
Definitely. And what you can do is look for your stop losses, your natural stop losses, and if you're inside, and you're going to be pretty tight, and you've got a nice, you could have a stop loss on this one, and I'm just going to give it to you here at that high back there. I'm going to put it quite tight, Wolf, because just the way this market is, and you could have a stop loss of say 729, right? So I think you've got to, if you put your stop loss of 729 on a daily chart, this is daily, right? I think you could make a pretty good trade on this one. Yeah. The next one I'm having a look at is little DTC, which we did call it, or you did last week, saying this was ridiculously cheap. This is absolutely mad. But you know what?
Well, Dave, just before you go on, I mean, we did talk about it 2 weeks ago. We said, let's look at some of these crazy stocks that have been really smashed to smithereens, that, this was trading at 20 million market cap at 8 cents. That's when we looked at it and we thought, holy moly, somebody could just come in and just buy it really on the cheap. And this company is actually EBITDA positive, right? If not profitable. It just makes no sense for it to be at 20 million market cap with 30 million in revenues. For a tech stock, it is, somebody would just go talk to them. And what happens today, Dave? Announcement saying, yeah, we had chat with a private equity, probably about maybe transaction of some kind. It's concluded. So we don't know if they're going to come back or not, but you can see this is probably happening across the board. A lot of companies are probably talking to a bigger player.
Yeah, it's a little bit dangerous, but at least what you're starting to see is it's starting to swing, right? And certainly, if you were to buy that one and you could buy it at 18.5 and you have a stop loss just under 15, quite a high risk trade, because that's quite a fall from 18.5 to 14.5 on the daily chart. That's a good like 20-30% fall, but it's the chart's not looking bad. And after all, Wolf, when you actually look at the long-term story, it has come from around, it's been as high as $2. So I think certainly around this sort of level, it could be an interesting, as long as you've got your stop loss on it. And again, what you've got to remember, none of these stories are trading very well at all, Wolf, on the weekly. So they're not Cincinnati stories, but the dailies are starting to turn up. And so you've got
for, on the fundamentals, you're going for contrarian. On the technicals, you're going for your dailies. Absolutely.
Now, again, so I've looked at ALU, and it's above the trend line. It hasn't had a decent swing, but not bad. And again, I get it. If someone had a nibble of this at 29 and had a stop loss just under 28, 27.90, I get it. They're just playing the Cincinnati method, but they're playing it on the daily chart. Likewise with 88. I mean, I think you got a breakout on the daily yesterday. It's not looking too bad at all. I think if it can maybe close a day above $8, I think you'd give it a little bit of a go. With a stop loss maybe just under that 750. I mean, have a look. Remember, you've got to play both charts, and guess what? It's actually trading nicely, positively on the daily, so on the weekly. So there's a bit to like about 88 actually, Wolfie, at the moment. I want to have a look at your AMS, because again, it's another stock that was ridiculously cheap, and it's starting to have a little bit of a bounce. And I had a look on the daily, and it's just starting to nibble above the daily. I'm wondering.
You know what? The other thing I can add here is that because these stocks have been so oversold and really priced for failure, any little bit of positive news, it's probably going to jump, right? This is the thing. It doesn't take much for a story like AMS. All they did yesterday or the day before, they basically said, yeah, we're going to hit our guidance. And they've actually said, we're going to be at the bottom end of our EBITDA range. And the market goes, yes, thank you very much. Up 30% in a day. This is the craziness of the market. This is what I'm thinking is, if you are going to be looking at these sort of stories, your 88s and some of the others we'll talk about in a sec, there's possibly, if there is some sort of good news in the quarterlies, because we're in the quarterly season, you might see some strong moves.
And Wolf, there's some trades on these stocks, right? So, you know, if you look at AMS, it's above the water level on the daily. So, okay, we've got to use our daily. And it's important, guys, when you're using daily charts, you're looking at the end of the day, not the end of the week. So at the end of the day, every day you've got to look at these if you're going to be in them, right? It's not like the weekly where you can enjoy yourself and play golf all week. You can't play any golf now, right? You're going to have to be watching it. So
this is a full-time job right now.
Full-time job. But Wolf, you can see, right? Maybe you could have your stop loss just under 32. Give it a little bit of leeway. You got a natural area there, 30, maybe 29, right? So okay, you could lose 5, 6, 7%, but you know, if you're picking this, you could make 100%, right? There's risk reward. Now, another one, ALC. Oh, so we like this one. We do like it, but it's not above the water level on the daily. And obviously, we know the weekly it isn't. But we do like this story. But you know what? It's got to do a little bit more. And I'm going to go back to the daily and have a look at this, Wolf. You know, what we wanted to do, we wanted to get back above that 13.5, come up, have a little swing down here, go again, then we're in this, okay? Yeah? Not quite ready yet. Let's have a look at a little aim. Again, this is another one. Get this on your watch list. These are ridiculously cheap stories. Needs to do a little bit more, right, Wolf? At the moment, we're just doing this on the daily, aren't we? We need a change of habit. We need to see it do a little bit more. Get over that 33. Have a little swing up here. We're in. And again, this is you know, one day, Wolf, there's got to be some great money to be made on this story, right? You know, it's having a big fall. Look at that. It's fell from $1 down to 28.5. Well, we're not going to buy it at 28.5. Like you said, we're going to buy it off the daily, right? It just needs to do a bit more. Get over 33, have a little bit of swing, then we'll give it. And then we can put our stop loss just under 33, right? We're always looking for these easy bits of easy trades. Let's look at like ERD, what they're doing. And again, another story. I mean, cheap. Is it cheap as chips or just cheap? Wolf?
It's fairly cheap. It's not cheap as chips, but it's fairly cheap for, you know, it was used to trade at $4 or $5, Dave. So it's come back a long way.
All right.
And he's actually profitable. And he's actually profitable.
So ticking a lot of boxes, right? It's making profits. And it just needs to do a little bit more. There's a daily. We want to get it back, you know, over $2. Have a little bit of swing. We might have to pay $2.10 for it, but bang. And what I like about this, Wolf, this is how we're going to pick some bottoms, right? Or we're going to try and make some money on these daily charts, right? Because, you know, we can't sit here for another year not making any money for everyone. So there's great ideas here, but we just need that ERD to do a little bit more. At the moment, it could just be doing this. It could be doing this. Let's get back over the trend line, a little bit like CDA. Let's start having a swing, yeah? Let's have a look at XRO. Now, they have had a little bit of a nibble up, right? But they've done that before. So, and this is the daily I'm looking at now. So, not quite believing you yet, XRO. You got to do a little bit more. Quality story. Maybe we just need to start seeing you swing up here. But what I would say, because it is a quality story, no problems having a nibble here, 80, maybe. You could buy it at 85.50, Wolf. Have your little stop loss just under there, 83.48.
I agree.
Yeah. I mean, you wouldn't
only losing a very smidgen, right?
Yeah. And you wouldn't normally do this. You'd want to see it, but I'm giving XRO because you are maybe top quality out of the ones we'll look at. Going to give you a little bit of a leeway. There's nothing wrong with that, right? PCG we've had a look at. It's just not quite doing it. But again, good story. But over 30 starts swing on that daily. We'll have a look at you for a trade, champion. Now let's have a look at car. The car sales doesn't look too bad. So let's get a picture of car sales. Let's get a feeling for it. You know, it's on the downtrend. It's hit support here on the weekly. It's time to bounce up. Well, you're looking sideways to me, car sales, but let's have a look on your daily. Let's see what you're looking. Again, I don't mind it, Wolfie, but what you have got is a little bit of pressure here from some old trend lines. So,
and Dave, fundamentally as well, you've got a big capital raising. I mean, they raised almost $1 billion, right? So you've got a dilution, bit of things. It's probably going sideways for the little while, but you know,
a good story. But let's just leave that. Let's leave that one alone. Let's have a look at FCL. and see what they're doing. See if they're, well, again, you're not far off little FCL, are you? I mean, we want you to get back above that 160.
Yep.
Start swinging. We might have to buy you at 170, 180. And if we can buy you 170, 180, we'll have a trade, right? Now, your weekly is obviously very weak, but what I can see, buying you here, you could have a recovery back to that 230 level, 240 level, right?
Hey, easily, because you've got brokers out there, right? Big brokers. One's got a price tag of $4. The other one's $3. That's like,
there you go. There you go.
Upside from them.
Let's have a look at your NTO, Wolf, because again,
yes,
obviously weekly looks a little bit sideways. So, you know, it's not interesting at all. Let's have a look if there's a daily. And again, your daily, I don't mind it. You know, it's come up, it's started to swing, it's come down again. Maybe looking a little bit sideways. Maybe we've got to get over that resistance at 152 on your daily. And if you can get over that 152, you're worth having a look at. Yeah.
Yep.
Now, one of my favorite stories, REA. So REA doesn't look too bad. And maybe if it can end the day above 121, say 122, it could go up and maybe test that 133 level, Wolf. 121, 133, what, like we were talking about earlier, that's what, 6-7%?
Yeah, about 7%, somewhere around there. Yep, that's
you take it. You take it. You got a stop loss of maybe 118, 117. That's okay risk reward.
Oh, in this market, I'll take a $5.
All right, Wolf. We'll end on one more. What's because you're talking about how much you like AIM, and it's only trading at 1 times. And you've got SWM. It's started to recover a little bit, hasn't it, from those lows? And remember, it's actually had quite.
Well, thank God we didn't get to 30 cents, because that would have been goodbye, Natalie.
Oh, I can't wait till we sell Natalie. It's going to be a great day. So there's your daily, and your daily really just needs to do a little bit more, doesn't it? So let's have a look at what your weekly's doing on it. Yeah. Listen, again, it's a nibble. It's still a long-term nibble, not a trade, right?
Oh, for sure.
So a lot of fun, Wolf. There's some ideas there. Ideas people.
Small little punting, absolutely ideas. Yep.
Because we can't play golf in this rain. That's the problem.
Yeah, well, you know, we're bored. We need to do something, right? And look, if the sentiment changes, we're going with the momentum. So where's the momentum right now? It's certainly not in the material space. It looks like tech stocks are starting to be picked off by the bottom dwellers out there. And sometimes you got to go, okay, is there money to be made in that space? Especially when we think a lot of these small spec stocks, tech stocks, have been completely oversold. That, you know, if they survive, they're going to be pretty, probably higher in a 12, 24 months time. So, it's an for me, it's educated punting type of stuff.
All right. On that note, educated punting.
I got one more thing.
That sounds very posh, Wolf. Educated punting. Where did you get that?
I'm just using the English vernacular.
Yeah, for someone from Poland, you've common people. Yeah, go on.
Well, I got to do one more thing, and I need to sing this. It's like, ooh. This is the fat lady singing, Dave. Go and put in the gold price. I think it's time to close the curtains and time to say goodbye.
Well, I haven't got the chart, but I know what you're saying about it. It is looking a little bit weak, isn't it?
The charts look like it's going lower and lower and lower. This is completely gone.
And you can see the gold ETF there about to break trend.
Yep. So but the actual XAU, which is the chart for the gold, it's broken all support. It's gone, and I think with one day to go, I don't think you can get back over that $1,800. You never know, but it's just looks like it's off.
Isn't amazing though how the charts tell you the story?
Yeah,
how they tell you the future. None of these gold stories have really been trending. It's like Northern Star, even some of the better ones, even NCM, like they haven't been trending. They've just been weak, haven't they?
Yeah, saying that, and I'm thinking, looking at the gold chart, right? I'm not obviously looking at US dollars, and it looks like, under 1,800, that was our key. It's gone 741. That's a significant drop. Looking at lower. on Aussie terms, it still doesn't look too bad at all, because the US dollar is going gangbusters right now. We're down to 68 cents. So on that premise, it's still decent. It's still decent. But, you know, how that's going to end up, I've got no idea, because like you say, look at that. I mean, that looks pretty good, huh?
Yeah, it does look good.
Yeah. It's confusing. It's very confusing when you look at the gold charts. You're thinking goodbye gold. But then you're looking at a gold, you know, Aussie terms. You're thinking actually some of these companies still should be making some good, decent dollars out of this. But I think the sentiment is probably the overriding factor for me. You can see what's happening. Carnage.
Wolf, this is the other thing that we've got to look at. Could the Aussie go back to if the commodities really get hit? I mean, could we go back to 55?
Yeah, absolutely. We could see you've got. Okay, a stronger US dollar means softer commodity prices, which means lower Aussie dollar. So we could see the Aussie dollar going down, materials getting down. So this is like a vicious cycle for us.
All right. On that note, thanks, Wolfie, and look forward tomorrow. It's all on. We got live and we got a video tomorrow. Thanks, Wolfie. Good stuff, champion.
Cheers, guys. Enjoy your punting.